Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the FANG stocks. We're going to take a look at the technology sector. We're just going to be looking here at basically NASDAQ related stocks. With the NASDAQ cooling down today and having that pullback, it's a good idea to see what the stocks in the sector look like. All right, so first off, let's take a look at the strongest, arguably the strongest stock out there, the strongest stock in the universe, the #1 company in the world, Amazon. Okay, so it keeps pushing higher. It did come up here and it hit this double top level, so it made a high in February and then it came back up, and then on this candle on the 20th it closed above high close horizontal resistance. Okay, and then first it closed above right here last week, and then last Thursday, and then on Monday it closed above Thursday's price, and that signaled more upside potential, and it keeps stair climbing higher, forming these black candles where the close is below the open but it's up on the day. And today's candle did hit right there with yesterday's candle. Let's see, is that the same level that last? Let's see, previous close. Yeah, it was really close to bearish meeting lines reversal pattern. It was right there. But the bottom line is that for this chart, it's all about EMA4. Okay, so it's about holding 1472. That's currently this pink line right here. And as long as EMA4 is holding, the signal is to keep riding. So you're gonna know that Amazon is finally cooling down when it closes below EMA4. Similar to this candle right here. Notice how it was riding above the pink line the entire time. It closed below, and that's when it started to consolidate, and so it got back above EMA4 on the 12th, and it's been riding the pink line ever since. So once it gets below, that'll signal that it's cooling down, and then the level that you want to see is this closing price here. You'd like to see that hold that 1450 to 1460 zone. That's a really key level. If it drops below that, then it would be 1422 would be on deck. So Amazon, it broke out above the double top level, and now it has to hold that level in order to break out higher. Is it going to keep pushing to all new time highs, or is it going to pull back in, below that double top level? We'll have to watch the next couple trading sessions. Okay, let's look at NFLX. Okay, so it did double top. So this is a double top on the charts. It came up in January and it hit the high close, all-time high close here on the 29th. It came back down when the markets cooled off, and it hit the middle Bollinger Band where it found support, and then it came right back up to that level, and so now it's double topping the way Amazon did right here on these candles, and then Amazon ended up breaking out higher. Okay, and so Netflix needs to do the same thing. It needs to close above this red line. Today a red candle formed. Now if you get a white candle above that resistance line, like the candle here on the 20th, above resistance, that's going to signal that Netflix is ready to head higher. If it fails to close above this 285 resistance zone, that will be a red flag, which it's already a red flag. It's failed to break multiple days in a row now, and then it's holding EMA4. Okay, so that's currently at 277.67, basically 278. If you see it drop below 278, that's going to be a red flag. It's been above the pink line since the bounce for 1, 2, 3, 4, 5, 6 for 8 days in a row. It's been able to close above the pink line. Once it finally closes below, like this candle right here on the 31st, that's going to be your signal it's ready to consolidate. Okay, so it could possibly pull back to that middle Bollinger Band at 268, basically 269. It has to hold 269 support. In order to keep the uptrend going, 269 needs to continue holding. If that breaks, that's when you could get the drop back down to 250 and a possible downtrend. So it's a really important level for Netflix. It's at a double top right now. Is it going to break out to all new time highs after I posted the video with the indices, or the way NASDAQ closed today, where it's got a descending triangle pattern, and it has multiple bottoms at horizontal support, and if it drops any lower, it could just be the thing that sets off a pullback. So yeah, I'm not sure Netflix is going to be able to push higher with the current market setup. We'll have to see, though. Who knows how this is going to work out. Okay, let's look at NVDA here. Okay, so it double topped as well. Notice how it's got the double top. It has the double top just like Netflix. It made the high on the 29th. This came all the way down to the 100-day simple moving average and the 50-day simple moving average, where it bounced, and it came all the way back up. And notice how it closed above on the 20th, above high close horizontal resistance. But yesterday it had the big red candle, you know, the big bearish engulfing candle there, and it pulled back. And so that was a red flag, you know. So today a black candle formed, an indecision candle. It closed just below EMA 4 at 242, and so 242.66. That's a red flag. It had been above that level for multiple days. It closed below that level yesterday. So it's 2 days in a row that it's closed below EMA 4. The big level to hold is the middle Bollinger Band at 236.46. If that breaks, that's when you could see it pull back down to test that 220 level. You know, when a stock makes a double top, that's the signal to lock in gains. Okay, let's look at Twitter here. So Twitter has also made the double top. As you can see, it's not as dramatic as the other double tops, but it came up here in the first week of February and made this open here was a high. It came back down, you know, the candles worked into the bands, and then it came back up and hit that same level where it's topped out. And so right now it has to break the closing price here on the 14th. That's the key level to break, this you know, 33.70 level. Now today's red candle was a major red flag for Twitter. Notice how it closed below the pink line, all right, on a strong red candle, and it closed below the lime line. The last time that happened was way back here, and what happened? It dropped all the way to the middle Bollinger Band. If Twitter retraces like it did last time, it dropped below EMA 8, it could drop all the way down to 29 and test the middle Bollinger Band down here. Now the big support level to hold is the bottom of this current channel, which is the closing price here on the what is that, the 8th. And so you know, it's this 30 support level. If you see it drop below 30, that would be a major red flag. It's already if it gets below 32, which it closed, you know, right at EMA 8 today, tomorrow below 32 would be a red flag that the chart is breaking down. Okay, now let's look at Apple. Apple had the epic bounce, right? It had a V-shaped recovery. They pulled it back. It hit this like crazy low level when it got down to 150, and then look at the V-shaped, just snapped right back. Well, it snapped back and it hit resistance, okay? And so now it's at this 173 resistance zone. Look at all the candles. After topping out on this candle, notice that there's 1, 2, 3, 4 candles in a row with upper wicks that failed to close above 173. Why is it not closing above 173? Because right now they have the program to sell every time it gets above that level. They're not letting it get above. Now, if you see Apple trade above 173 tomorrow, that's going to signal upside potential, and it could run back up here to the recent highs. That's the upside potential, is that it comes back up here to this 178 to 179 zone. But the downside risk is if it drops below EMA 4 here at 171.41, and then it fails to, you notice it's in a tight channel. All these candles the last you know, 5 days in a row, you know, at least the last 4 days, the real candle body has formed between these two levels. And so if it drops below EMA 4 at 1741, then you have the 50-day simple moving average at 170.39, the green line. If that breaks, then you could really see it pull back. It could come down and test that 100-day simple moving average in middle Bollinger Band in that 165 to 167 level. Okay, now those were the good-looking charts, and now we're going to look at some more charts in the sector that don't look as hot. Okay, let's look at Facebook here. So Facebook, you know, had the pullback, and then it bounced off the 200-day simple moving average, but it never got back above the middle Bollinger Band. It's currently still in a downtrend. It's below the 50-day simple moving average. It's below the middle Bollinger Band. It's right at the 100-day simple moving average. It's at a key level right now. It needs to, you can see this closing price right here. Well, I guess actually I had it on this candle. 180 is the big level to break. If it can get above 180 and then get above 182, which is the middle Bollinger Band here, then it could really get moving. If it fails to break above 180 and it drops below 179, which is this 100-day simple moving average, that would be a red flag. And then the really big red flag for Facebook is the pink line here, the pink and lime line at 178. A drop below 178 would signal that the bears are still really in control. Okay, so keep in mind that this isn't a downtrend, and right now the bears are in control of the action. You know, so until it gets back above that middle Bollinger Band and gets a new uptrend going, you know, it's signaling more downside risk. Okay, now let's look at Google. Okay, Google, you know, actually it did look better than Facebook, but it's cooling down as well. Google did form a bearish reversal pattern yesterday. It formed a bearish shooting star. That's an inverted hammer that's formed during an uptrend. Now it did form a red candle today, but it didn't quite confirm the pattern. It's trying to confirm this pattern. So you notice how it had the multiple white candles in a row. That long upper wick was showing profit taking, and then you have the small real candle body at the bottom, and that was followed by a red candle. This is all red flags that the chart could break down. Now it's holding the middle Bollinger Band currently at 1108. That is the big level to hold. If you see it drop below that level and below the 50-day simple moving average at 1101, basically 1100, if you see Google drop below 1100, that's going to be a red flag, okay? Because right now it's still in a downtrend. It got in a downtrend when it closed below the middle Bollinger Band on February 3rd. It was in an uptrend before, got below the middle Bollinger Band, which is the 20-day simple moving average, had the downtrend. It's right back at the middle Bollinger Band. Until that level turns into support, it's just at the top of the bearish downtrending channel. The bottom of the channel is the lower Bollinger Band, which it bounced off, and it ran up to the top of the channel, which is this purple line, the dotted purple line. So it went from the bottom to the top. Now is it going to break out and retest the prior highs, or is this going to signal a temporary top and it's going to pull back? You know, when you look at the NASDAQ chart, you know, it's telling you be careful, there's downside risk. Okay, let's look at Intel here, INTC. So yeah, this is another one that made it back to the middle Bollinger Band. So when it dropped back, it got below the middle Bollinger Band on this candle on the 5th. It bounced off the 100-day simple moving average support zone, and then the last few days it's been working on this middle Bollinger Band, the dotted purple line. You know, it's closed up a couple days and it's closed down a couple days. It's all about staying above 46. So going forward for Intel, keep it really simple. Above 46 is bullish. It signals that it could get an uptrend going. If it drops below 46, that makes it a risk to hold. The really huge level is the 50-day simple moving average at 45.20. That's the big support level below. If you see Intel below 45, that's when you know the chart's really broken. So going forward, above 46 signals upside potential, below 45 signals downside risk. It could drop down to test that 100-day simple moving average at 43.89. Okay, now let's look at Microsoft. And Microsoft did get above the middle Bollinger Band. All right, so yeah, you know, Facebook does have one of the ugliest looking charts. Of these top dog technology stocks. It got Microsoft got below the middle Bollinger Band on the 5th, bounced off the 100-day simple moving average support zone, and then it's above the middle Bollinger Band right now. So Microsoft is one of the better looking charts in the fact that it has an uptrend going. It is above the middle Bollinger Band. Okay, it's not at a double top level, but it is finding resistance at 93. Okay, so going forward, it has to break above the 93 resistance zone. If you see it trading above 93, that would be bullish, and then it could run back up there to test the recent high close, this 94.50 level. Okay, that's the big level to break. And now if you see it drop below the middle Bollinger Band, that's the big support level right now. That's at 91. That's going to signal downside risk. Okay, that's the dotted purple line. So above 93 signals breakout higher. Below 91 signals potential drop down to the 50-day simple moving average at 88.61. It'll be a risk to hold long if it closes below 91. Okay, if it gets above 93, that's a signal the uptrend's intact, and it could run to 94.50. Okay, now let's look at Snap. Snap got crushed. Okay, it was already having a bad enough time, and then it had the Jenner tweet that knocked another $1.3 billion of market share. You know, market cap, market share. It basically got crushed today. Okay, so it didn't help with the tweet, but it did come down and it bounced off of a key support level. That's the 17 support level. That's the open of this candle when it really broke out and ran. Okay, so 17 is the big level to hold, and then the middle Bollinger Band currently at 1670. So look for a technical bounce off of 1670, the 1670-17 zone. Now if you see it drop below 17, that's going to be a red flag because there is a gap on the chart between high of day on the 6th and low of day on the 7th. There's a big space between here on the chart. There's no candles, and so if it gets below the top of the gap level, drops below 17, it could drop down and fill that gap. That's the risk, is it goes all the way down to 1425 and fill the gap. Now there's a bunch of support levels in between. First there's 17, you know, and then you've got the middle Bollinger Band, which is the 20-day simple moving average. The 250 and 100-day simple moving averages are all lined up before the bottom of the gap. But if Snap is going to keep an uptrend going, it has to stay above 1670. So look for a technical bounce off this zone. Notice it had the big pullback. This is the Snap 15-minute chart. And so yesterday it got above the middle Bollinger Band midday and into the close. You can see, or towards the close, it was holding this dotted purple line, but it failed to get above the green line, which is the 50 simple moving average. And today it had the huge pullback on that Jenner tweet, really crushed it. Well, look, end of day, it got above the middle Bollinger Band again, end of day. So if it can stay above 1731, All right, that's the first key. And then get above the 50 simple moving average at 1806. That'll be a signal it's back in play. Once you see it break above the 50 simple moving average above 18, that's when you're like, okay, the bulls are back. But until that time, a run up to the 50 simple moving average will just be a short cover rally. The bounce above the 20 simple moving average, this is just a short cover rally until it gets above the middle Bollinger, until it turns this 50 simple moving average and middle Bollinger Band into support, and then it can get an uptrend going. Then it can run up to 19 and test the 300, 100, and 200 simple moving averages. Okay, let's look at MU here for the final chart. And so MU, made a nice move. It had a big run. And it's been in, basically, it's in this sideways type of channel. It's a really big channel, but the bottom of the channel is down here around 39, and the top of the channel is up here around 47. And so right now it's at 44. It's kind of in the middle of the channel. It's currently testing that EMA4 at 44.24 support zone. If you see it drop below EMA4 there, then you could see it come back and test this middle Bollinger Band and the 1500 simple moving average. Basically, the risk is it drops down and tests 43. It has to hold 43 to get this new uptrend going. Now to the upside, it needs to break above 45. If it can get above 45, then 47 is the next target. It has a good uptrend going. It's much better if it holds EMA4. When a stock stops holding EMA4, it's a signal the bears are taking over and it's cooling down. Really strong stocks ride EMA4 support higher. It doesn't mean the chart's broken. It just means it's cooling down. Now the chart would be broken if it got down here and it broke below the middle Bollinger Band and the 1500-day simple moving average. That's when it turns into risk and you can get a downtrend. But right now it's in the uptrend mode. It just has to hold support and break resistance. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check us out at our chat. I'll post the link below the YouTube video. Thank